So you have bad credit and you've heard about these things called bad credit mortgages, but do they really exist? And if so, who's going to give me one? Well, in today's video, we'll be telling you about a lender called Bluestone Mortgages and whether they will accept your bad credit. So before we get into it, let's quickly summarise who Bluestone Mortgages actually are. For a bit of fun, I typed it into ChatGPT to see what they had to say. Bluestone Mortgages is a UK-based lender and broker that specialises in complex credit situations. They focus on providing tailored mortgage solutions for individuals who may not fit the traditional profile used by high street banks. Overall, Bluestone Mortgages is dedicated to offering mortgage solutions that address the complexities of credit challenges, making them a potential option for those who have struggled to secure financing through traditional channels. I would say that's pretty damn accurate, and that's because Bluestone Mortgages are one of our most commonly used lenders, and that is because they do accept, you guessed it, bad credit. Now, there is sometimes a perception that mortgage lenders operating in the bad credit mortgage space are small lenders that might be here today and gone tomorrow. However, you will find that Bluestone Mortgages are actually backed by Shawbrook Bank, a company that was originally set up over 80 years ago and lend hundreds of millions of pounds every single year. Hardly a small player. So now that you know a little bit more about Bluestone Mortgages, why don't we take a look at some of the bad credit that they will accept, as well as some of their advertised interest rates. And like always, please remember that the information that you're seeing contained in today's video is only accurate at the time of making. A good place to start would be with some information that I pulled from Bluestone Mortgages' website with a brief summary of some of the things that are acceptable to first-time buyers. And the reason I've picked first-time buyers is that is what the majority of our clients are looking for help with. However, if you are moving home or you're perhaps remortgaging, you will find that a lot of the same criteria does apply. So the image that you're seeing on the screen right now, this is what some of the advertised policy looks like for Bluestone Mortgages on their website for first-time buyers. So at the top they've put here, no credit scoring. Remember, Bluestone Mortgages is one of these mortgage lenders that doesn't credit score. They will look at what your credit history looks like, but they're not going to get too hung up on the score. They will allow IVAs, individual voluntary arrangements, DROs, that's a debt relief order, and bankruptcies, it's saying they're all allowed. All CCJs, county court judgments, and defaults are ignored if under £300. That's quite interesting. Up to 4 defaults within the last 3 years are accepted. 3 CCJs within the last 3 years can also be accepted. It's also saying they will lend up to 90% LTV, that stands for loan to value. That's basically saying if you have a 10% deposit and you're borrowing 90% of the value of the home. And it is also saying, which is a fascinating piece of Bluestone's criteria based on completion. It says here in brackets, criteria based on customer's credit profile on the date of completion, not application. And what this is saying is, as long as you have rectified a lot of the incidents of your bad credit by the time of completion, that is what they will look at, okay? And then finally it says here, for joint borrowers, the product selection is based on the lowest credit tier of any of the applicants. So if you've got somebody who's got absolutely perfect credit, and then the other person who isn't that perfect, they are gonna treat both people as if it's not that perfect. You'll also see that they've highlighted a few potential rates here as well, which is always subject to change. And it's saying 5-year fixed rates from 6.14%, 3-year fixed rates from 6.24%, and 2-year fixed rates from 6.39%. Now you might be thinking, that sounds great. And don't get me wrong, I do think it is. However, we do need to scratch beneath the surface just a little bit more. Because if you're reading this and thinking, wow, with a 10% deposit, I can have 4 defaults and 3 CCJs within the last 3 years, unfortunately, that's just not the case. And that's because the amount of bad credit that you can have accepted will be directly relatable to the amount of deposit that you put in. And you'll see an example of this on the next image that we're going to be talking through. So you will see on your screen now that 4 defaults and 3 CCJs they can be acceptable within the last 3 years. But when you actually look at the table here, you will see that you would need a 25% deposit if you look at that column on the far right. So what I'm going to do to properly explain how this works, I'll pick a column and I'll talk you through the criteria that you would need using the level of deposit that we're looking at. And then what you'll be able to do is you'll be able to take the situation that directly applies to yourself and see if you qualify using the deposit that you have. So the column that I've picked here and the one that I'm going to be talking you through is going to be the AA column at the 85% loan to value. Remember, that's with a 15% deposit, borrowing an 85% mortgage. Now you will see that there's two options at 85%, the AAA and the AA. And what you will find is a 15% deposit is acceptable with both, but the AA, you'll be allowed a little bit more bad credit, so they're going to be a little bit more lenient with you, but you probably guessed you'll find that the interest rates will be slightly higher when it comes to the AA as opposed to the AAA. So if we look back at the column then, AA column, 15% deposit, 85% loan to value, and what you're going to be allowed is 2 defaults within the last 36 months. You're going to be allowed 1 CCJ, that's a county court judgment, in the last 36 months. The next one is missed mortgage payments or secured loan payments. That might be a secured loan if you've got that attached to a property, or it might be a rental payment. So remember, this is if you're renting currently, this is what they're going to be looking at. And what they would allow is they would actually allow 2 late or missed payments. They would treat them the same, and they would allow 2 in the last 13 to 24 months. So types of bankruptcies or debt relief orders, they would need to be discharged over 3 years ago. An IVA or a trust deed, again, that would need to be discharged over 3 years ago as well. Payday loans in this column, you will actually see they are allowed, so they are still allowed to be in place. Now, unsecured arrears, what this column is referring to here is an arrear. An unsecured arrear is something such as a loan, a personal loan perhaps, not a secured loan on a property, maybe a credit card, a catalogue, that type of thing, okay? And it's saying a maximum of 5 unsecured credit accounts in arrears are allowed at the point of completion. So remember, this is not at point of mortgage application. As long as this is at mortgage completion, this could be allowable. So I'll just repeat that, a maximum of 5 unsecured credit accounts in arrears at the time of completion. And it's saying here that the arrears can be ignored in the following circumstances: if the balance of the loan is under £300, or if the account has defaulted or is part of a DMP, a debt management plan. Okay, so if it's under £300, they're going to eliminate that from that part of criteria, or potentially if the account has defaulted or part of a debt management plan, they can potentially exclude that as well. And then we're just following in with unsecured arrears here and how recent will be allowable. So irrespective of the case, if the arrears balance is under £300, it will be completely disregarded, or it can be completely disregarded. A maximum of 2 missed payments within the last 6 months can be allowed per credit agreement. Remember, this is at the time of completion. If the balance is over £500 though, the latest payment must have been made. When it comes to debt management plans and debt arrangement schemes, if we have a look here, these are potentially still okay, even if they are still in place. However, debt arrangement schemes, these must be repaid prior to or upon completion. Now that we've taken a look at the various types of bad credit that Bluestone Mortgages will accept, let's go ahead and take a look at what some of the interest rates they offer might look like. Now, just remember, one of the biggest factors to this will be the size of the deposit that you are putting down. So the first image that you're going to see is a table showing the interest rates that Bluestone would offer if you are paying an arrangement fee of £1,495. Now, an arrangement fee, in case you don't know, is a fee that a lot of mortgage lenders charge for arranging the mortgage. This is usually only payable if the mortgage goes ahead, and the fee can usually be added onto the mortgage. So you'll see that there's a lot of different rates on here. a lot of different options. Probably just a good example will be to pick the AA products that we were looking at with a 15% deposit. So that's going to be 85% loan to value and the AA column. So if we have a look at the top, we're looking at the 2-year fixed option, and the AA column at 85% loan to value, you will see that is 7.14%. That is on their 2-year fixed product. And as you can see on the right, that's with a fee of £1,495. If we have a little look further down, they do also have a 3-year fixed product, the 85% loan to value with the AA range, that's 7.09%. And they also do a 5-year fixed product. Let's look at the AA column again, 85% loan to value, that's actually 6.99%. So the next image that you see on your screen, this is going to be Bluestone Mortgage's fee-free range. Now, because in this scenario they are not charging the arrangement fee that we previously discussed, just remember, for that reason, the interest rates that you see are going to be a little bit higher. So let's pick the AA column again, and let's have a look at what the 85% loan to value range looks like here. So as we can see, a bit higher than before, 7.79%. However, you can see, as we've mentioned, there is no arrangement fee that comes with this. If we have a look at the 3-year fixed option, the AA column, 85% loan to value, that's 7.54%. And then if we have a look at the 5-year fixed option, AA column, 85% loan to value, we're looking at 7.34%. Now you might be thinking, which one's the cheapest option for me? Is it the one with the arrangement fee, or is it the one without the arrangement fee? And the honest answer is, it just depends on a few different factors, such as how long that you're taking the mortgage term over and the amount of money that you're borrowing. The good news is a mortgage advisor will be able to work that out for you and tell you the most appropriate option for your circumstances. So now that we've taken a look at some of the main types of bad credit that Bluestone Mortgages can accept and some of the different interest rates that you can potentially be offered, I will finish by saying that mortgage lenders such as Bluestone Mortgages, they will look at different types of criteria before they potentially approve your mortgage application. And that's going to be things such as employment status, bad credit that we've just covered, and what your nationality is, any income that's coming into the property, and the money that you're spending. Once they look at the case overall, it's at that point they're going to decide whether they approve your mortgage. And with that being said, let's quickly recap on what we were hoping to learn from today's video. Do bad credit mortgages exist? Well, I hope by now that we're in agreement that they do. Who might be prepared to give you a bad credit mortgage? Well, Bluestone Mortgages absolutely could under the right circumstances. Will they accept your bad credit? Well, hopefully after today's video, you've got a good idea, but if you do need some further guidance, then feel free to get in touch. So if you do have any questions or any ideas for future videos, feel free to pop them in the comments below. Alternatively, you can send us an email and the email address will be in the description below. So thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for all tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.